Hey there, it's Josh at optionsizzle.com and wealthwithoutfear.com. In this video, I want to educate you a little bit on my sizzle method, and I want to break down this name that's going into earnings and provide some analysis for you that could possibly be tradable. So taking a look here, this is a name that I've actually have never heard of until I did a search a little bit earlier for this activity, this unusual option buying and selling that I've been doing for the last 6 years. So I've come up with a specific method of how I find names and how I trade them. So this name right here is one that came up pretty high on my list. You can see it's already up 5%, and it's a $12 stock going into earnings here, which $12 stocks are very cheap and have a little bit more of a volatility, higher volatility because of the price swings. And being that the price is already up 5%, that is something I keep in consideration and I want to look into. So taking a look here at the trade tab, the thing that I picked up on were the November 1250 calls being purchased here. So if you're not familiar with options, there's different option contracts here. And a lot of times this kind of activity that I'm walking you through can be a precursor for what future price movement of a stock is. So derivatives are much more of a leverage tool and are a leverage tool than playing traditional stocks. So here, what this is indicating is that these buyers of these calls, and I kind of got a little bit ahead of myself here, that the volume here, you see 4,900 contracts traded. Well, these are buyers coming in here. And if you're a buyer of an option, the only way you make money is if the price goes higher. And you can see right now prices are at $12.50. That's this contract strike that they're striking at. So that would be considered at the money. That's good. The thing that is interesting on this one, especially a stock with this price, is that they would not come into this in the money. And the reasoning why that it's kind of strange to me is because it has 11 days to expiration. That would be the smarter trade. And it would be even smarter to come into these December 10 contracts and to pick it up and buy these in the money. But you can see here the volume, the open interest, this is very thinly traded. And that has a bit of a concern. It makes things a little bit tough. So a lot of times, most people would just jump after this one. But for the trading that I've gone through for the last 6 years of trading this activity, I have seen and I know a lot of things that can occur and will occur. So this kind of activity, you always want to pair it with something else. You want to use a different strategy. You just don't want to buy calls. Before I do that, though, I just want to show you the fundamentals of this. This is something else I consider. So taking a look at this website, it's called finviz.com. Just type this in here. You can get a little bit of an estimate of their fundamentals here. So price to sales, price to book, forward PE. These are a few things that I take a quick look at. But the one thing that I'm always interested in is, especially a stock like this, can it get some momentum? And you see here that the shares, the float that is short is 12%. And that would equate to about 14 days of covering, which that's a good amount of short interest. Doesn't mean that's going to happen, but that's what I refer to as a wild card, meaning that if there's some kind of surprise news that this could eventually get going, doesn't mean it's going to happen after earnings. But these are the things that when I look at this, and especially picking direction is such an unlikely event to being correct that you have to make sure that you have a lot of things aligned with it to be successful at picking direction. And picking direction is meaning buying of options. So coming back to this, you see the contracts here, and in the Thinkorswim platform, you can see that the time in sales here, the top trade took place this morning, and it was a 12,000 contract. It was for 40 cents. Now I could go through here and show you order by order, but I know most of these were purchased here. So one of the things that you can see here is that somebody actually put on a diagonal spread. They actually, it looks like they possibly bought these, or may have sold these or bought these. It's only 5 contracts, but these are the kind of things that you want to keep a lookout for, some kind of diagonal spread. And that's what I mean by pairing, especially with option strategies with it. So one of the things that you could look to do on this one, and here's a few considerations. You could do something if this is a name that you followed. I don't know too much about it, but there's some ways to trade this. First one could be to sell a put in the December contracts, meaning that if you like the name, wanted to take advantage of it, you could look to sell it. The problem with something like this, it's hard to borrow, so the premiums on the put side are much more, and it means a lot more volatility could be part of it. But the hard to borrow could be what, like I said, the high short interest, that could be the catalyst to the upside. So with 4,900 contracts traded, that's a good amount of money being put to this. And when you see and look at all the volume that's traded in this one, we don't have that amount of open interest. So there's something interesting about this. And a lot of times this is something that I'll just put a little bit of money invested wise and structure some kind of trade. So one trade that always stands out to me is always selling the November 1250s and then buying the 1250s here. But the thing is that you're not getting a lot of with the at the money. I would like to get a little bit more of a strike. So meaning I would have loved to get these 15s and sell the 15s and buy the 15s here, because if there is a bit of a move higher, then that would work out a little bit better. One of the things that you could look to do is buy the shares and then sell the 1250 calls against it. That's a consideration. If you want to go a little bit longer term, you could look to go out into February, and this is where I'm talking about structuring some kind of trade. And the reasoning why is if there is an event and earnings do move higher, then that could be something that moves the prices higher. But a lot of times you don't know if that's really going to be the case, because those buyers could be just gambling a little bit, and the reaction might not come that fast, and you need to go in and make sure you have enough time on your side. So you can see here, when we just look at some of these other options, it's just so thinly traded and makes things really, really tough. So some of the options to do is to get long stock and sell calls. You could get long stock and possibly get into the December 1250. So it has 46 days. You take a little bit more. So it's a bit of a covered call. You're taking in consideration the high implied volatility. And from your basis on this, what you're looking at is that you get called away. So we're selling right at the monies, and we have long stock, and you have for 11 days. And in reality is what you're hoping for is that prices stay right here at 1250, and you take in that amount of premium selling this call. When we go out to a little bit longer here, you have 46 days, so this makes a little bit more sense. You could also look to buy stock and sell puts here as well. You could sell the 1250. That's a very aggressive trade, and I know that a lot of you, that's a little bit out of your realm. So it almost would be, since you're buying the stock, it would be somewhat of if you were buying the calls here, but you're actually long the actual stock, and you're taking in the premiums sold on the puts. The other thing you could look to do as well is to buy a December call. So you can look to buy maybe this 1250 call. You can see the structure of the volatility here. This would get a little bit lower, and you can actually see here that we just had an order print. It's not a big order that has me interested, but with the what I call spillage, we could see here that actually somebody just bought in and stepped in and bought these calls here. So that could be an option for you as well. And or you could look to possibly do something, really that's the only thing that you would want to do. You would go in with the December 10 call or the December 1250. That gives you enough time, 46 days. It might not be enough time. But with what happened here is that even though these are 5 cents wide, after the event occurs, that's when things are going to be a little bit tricky, and these could become in the money at that point. So that is really what I have for analysis. I wanted to point this one out because this is a bit of a tricky one to trade, but this is where that activity in the derivatives can really spark some interest in playing names that you might not be looking at and considering. And you can see here we just actually have more volume here, so it's pretty interesting that we're actually getting a pickup in volume here as we're doing this video. And you can see here actually someone just came in and bought some options here. So at this point that creates a little bit of volume here, and so it'll create some open interest, and that creates a little bit of opportunity here. You can see that the spreads this widen here. So those are the things that you want to consider, and this is something I've been doing, like I said, for the last 6 years. So in the next few weeks I'm going to have a training on how to trade this a little bit more in depth, how to find these opportunities, and why, if you're trading any kind of direction in any kind of underlining, that this is something you're going to want to consider in your own trading approach. So what you can do is go to the SIZZLEmethod.com, SIZZLEmethod.com. Sign up for the wait list here. I'm going to have a special pricing for those that join, and I will start that training, like I said, in the next few weeks. If you have any questions, feel free to leave it below the video here, or send me an email at josh@optionsizzle.com. Take care.